All right, today we're diving into something, well, a little cheesy. We're heading to northern Italy to look at a bank that came up with an absolutely brilliant way to use a regional delicacy as rock-solid loan collateral. Let's get into it.
I mean, seriously, what if your bank loan was secured by cheese? It sounds like a joke, right? You walk into a bank, plop down a wheel of cheese and ask for a loan. But here's the thing. For hundreds of small business owners, this is their financial reality. It's not a hypothetical at all.
Yeah, you heard that right. Since 1953, that's over 70 years ago, a regional bank called Credito Emiliano, or Credem as the locals call it, has been accepting wheels of Parmigiano Reggiano cheese as collateral. This is no new marketing gimmick, you know. It's a tradition that grew from really truly understanding the local community.
And look, we are definitely not talking about that stuff in the green shaker can. No way. We're talking about Parmigiano Reggiano, the one and only king of cheeses. It has this protected DOC status, which basically means it can only be made in a few specific provinces in Italy, following a super strict recipe. That makes these wheels of cheese incredibly valuable, and, as it turns out, surprisingly effective collateral.
Okay, so you have to wonder, why did this system even need to exist in the first place? Well, to get that, we need to understand the, let's call it a financial squeeze that the actual cheesemakers were facing.
So with Parmigiano Reggiano, the value is all about time. It's all in the aging. A producer has all their money, their working capital, literally tied up in these cheese wheels for years. You know, at 18 months it's good, it gives pasta some zing. But wait until 36 months and they say it makes angels sing, and it's worth a heck of a lot more. This long wait before they can actually sell the stuff creates a massive cash flow problem.
And that waiting period, it is just packed with risk. First off, it's a luxury product, so when the economy takes a downturn, sales can get hit hard. Then there's the cheese itself. It's fragile. A little crack or a bubble can make a whole wheel worthless. And on top of all that, the industry is made up of about 3,500 small, family-owned farms. And because of tradition and, pride, they don't want to merge into bigger, more stable companies. You add all that up, and for a traditional bank, these guys look like really risky borrowers.
So what do? This leaves the producers with a pretty awful choice. Either sell your cheese early to get some cash in hand, but lose out on its full value, or you hold on to it for years, just crossing your fingers that nothing goes wrong. It's a huge financial gamble, whichever way you slice it.
And this is where Credem Bank comes in. They stepped up with a solution that was just so elegant. It was perfectly tailored to this exact problem, and it ended up building a better system for literally everyone involved.
The process itself is brilliantly simple. A farmer brings their young, fresh cheese wheels to the bank. The bank has its own experts who inspect the cheese and then give the farmer a loan for somewhere between 70 to 80% of what that cheese will be worth when it's fully aged. And then, and this is the absolute key, the bank takes the cheese and ages it for them in its own high-tech, climate-controlled warehouses.
And you have to understand, this is not a small, cute side project. We're talking about a serious operation. At any given time, the bank is holding around 190 million euros worth of cheese in its vaults. So yeah, this isn't some gimmick. It's a massive, valuable asset that's securing hundreds and hundreds of loans.
Their warehouses are enormous. They can store almost 500,000 of these wheels, and each one weighs about 80 pounds. So to manage all this, the bank had to build some serious infrastructure. They've become experts not just in the financial value of the cheese, but in its actual physical care.
So how does this actually shake out for everybody? Does it really work? Well, it turns out this is one of those rare, perfect examples of a true win-win-win situation.
Check this out. This model provides a huge operational benefit. Normally, cheese producers have to deal with a spoilage rate of about 10%. That's 1 in 10 wheels lost. But in Credem's high-tech warehouses, that rate plummets to just 1%. The bank isn't just handing out cash, it's actively protecting the very asset that the loan is based on.
So you can see how everyone wins here. The farmers, they get the capital they need to run their business, and the risk of losing product goes way down. The bank, they get a low-risk, tangible asset that they literally have in their possession, plus they run a profitable side business with the warehouses. And the community as a whole, It gets to preserve this iconic, traditional, family-run industry that's at the very heart of its regional identity.
And this is a point that Nikolaos Terkakis from Harvard Business School really emphasizes. He says from the bank's perspective, it becomes almost risk-free. Why? Because, as he says, they have the collateral in their possession the whole time it is aging. They can see it, they can touch it, they can monitor its condition constantly. If a wheel starts to go bad, they know instantly. But the story isn't quite that simple. This whole model, which is known as inventory financing, it has a bit of a history, including some pretty major cautionary tales.
Yeah, this kind of financing comes with a famous warning. You have to go back to 1963, to the infamous salad oil swindle. A trader got massive loans using his soybean oil inventory as collateral. The only problem was his tanks were mostly filled with water. He just put a thin layer of oil on top to fool the inspectors. So what makes Credum's model so different, so safe? It's that they physically hold and are experts in a high-value, non-perishable good that is almost impossible to fake. You can't fake an 80-pound wheel of Parmigiano Reggiano.
Okay, now here is a fact that might actually blow your mind. After everything we've talked about, these cheese-back loans, they only make up 1% of Credum's total business. Just 1%. So you have to ask, why on earth do they even bother? The real value, it turns out, goes way beyond that 1%.
It really comes down to what the bank's own leadership says. Fausto Filippi from Credem puts it simply. We are committed to sustain and support Parmigiano Reggiano producers because Parmigiano Reggiano is a product typical and unique to this area. It's about being part of the community, about preserving a shared heritage. In a country where banks can often be, well, not so trusted, this program generates an incredible amount of goodwill. That's a reputation you just can't buy.
So, when we zoom out and look at the big picture, what's the real takeaway from this amazing story of food and finance?
The most crucial point here isn't just that you can use cheese as collateral. It's that finance can be and should be tailored to the specific real-world needs of a local industry. Credem didn't try to shove the cheesemakers into a standard loan box. No, they built a brand new box just for them.
And that really leaves us with one final fascinating question. Just think about it. What other local industries around the world, ones with long production times and unique risks like aging whiskey or curing fine timber or even cultivating pearls, what other industries are just waiting for their own cheese bank, waiting for a financial partner to truly understand their business and create something just for them? It's an awesome question to think about for the future of finance.